We cannot change what happens out here, but we can change how we react. And so if you just beat yourself up and you just blame everybody else for every problem that you have going on in your life, you are not going to improve anything. Why is it that 88% of millionaires are self-made? That means these are people who did not have millionaire parents. These dollars that we work so hard to earn is fake because our money, or what we call money, is not backed by gold or silver or anything tangible. What's up everybody, I am Jaspreet Singh from theminoritymindset.com, where money minds rethink rich, and today we're doing something a little bit different because I'm going to be diving deep into your money and your mindset, because I got some of our best clips lined up where I talked about the things that are keeping people poor. That way you can understand and make sure that you're using your money the right way. Let's get right into it. I grew up being told that if you wanted to become successful or rich financially, all you had to do was become a doctor and then save a whole lot of money. My parents are immigrants from India, and so I grew up with saving in my blood. Savings? Are you there? Here's the thing, if you work really hard and you earn $100 and you save this money in the bank, what are you actually saving? I mean, it took you effort and labor and work to earn this $100, and when you save this money in the bank, what do you end up actually saving? I'll get to that in just a minute, but before I get into answering that question, let me show you this. Let's assume that you have a nice job where you are earning $50,000 a year, and in order to earn this $50,000, you're working 40 hours a week for 52 weeks a year. So you're putting in 2,080 hours in order to earn this $50,000 of money. Now, what you have to ask yourself is, what is this $50,000 that you're earning? I mean, it's $50,000 worth of money, but how much effort is really required to earn or create that $50,000 that you had to work to earn? Because the government can create or print that $50,000 before I can even finish the sentence with just the push of a button. So Robert Kiyosaki, the author of Rich Dad Poor Dad, really made popular this idea that our money, these dollars that we work so hard to earn, is fake because our money, or what we call money, is not backed by gold or silver or anything tangible. This money is just paper, and we work so hard to earn this paper, while the government can just print this paper with the click of a button. If you want to see his explanation as to why he thinks money is fake, I will link that for you in the description below. But it's kind of hard to imagine that our money is fake, because this is the money that we use to pay our rent, to buy our food, and to buy our vacations. But the question that you want to ask yourself, especially now more than ever, is what are you working for? You say that you're working for money. Okay, but what is money? Is it that paper $100 bill that I have? Right now, at the time of me recording this video, the United States has right around $28 trillion worth of national debt, and we are on pace to hit $78 trillion worth of national debt in just a few years. Now, that probably just seems like a random big number because it's really hard for our brains to comprehend what $1 trillion is, so let me try to break it down. Let's assume that you can count $1 in 1 second. If you could do that and you wanted to count $1 million, it would take you 11 days. Now, that's probably not something you want to do, but you could do it. If you wanted to count $1 billion, it would take you just over 31 years. Again, that's definitely not something you'd want to do, but you could do it in your lifetime. But if you wanted to count $1 trillion, that would take you 31,000 years. That's not something you could do in your lifetime. Now, if we multiply that by 28, which is $28 trillion, the amount of national debt that we have, that means it would take you almost 900,000 years to count the amount of national debt that we have, and we're on pace to triple that in just a few years. So what is my good friend Benji really worth? No hard feelings, Benji. Well, money is supposed to be a representation of worth. If your time is valued at $20 an hour and you spend an hour at work, then you earn $20. That's also supposed to make spending money pretty straightforward, because if you want to buy a $100 scarf, that means you got to work for 5 hours to earn $100 to afford the scarf. The tricky thing now is that the value of our money can be manipulated. Back in the day, our dollars used to be tied to the value of gold. And let's assume hypothetically that an ounce of gold is worth $20. So if you put in an hour work and you made $20, you effectively made 1 ounce of gold worth of value. These paper dollars were really just a paper representation of how much value that you created, that you could see through how much gold that you were entitled to. If you put in 1 hour of work, you're entitled to 1 ounce of gold. If you put in 5 hours of work, you're entitled to 5 ounces of gold. So this creates a benchmark of value. value because not only does it take you time and effort and labor to earn that $20, but it also takes time and effort and labor to mine 1 ounce of gold. So it was a lot easier to define what $100 was worth because $100 was worth whatever it took to mine 5 ounces of gold. But then in the 1970s, our dollar was taken off of the gold standard, so our dollars became just paper.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
That's when our dollars changed to something called fiat currency, and I'll just read you the definition of what that means. A fiat currency is a national currency like our dollar that is not pegged to the price of a commodity like gold or silver. The value of a fiat currency is largely based on the public's faith in the currency's issuer, which is normally the government. So this money that you're working so hard to earn is not backed by gold or silver or anything tangible. It's just a piece of paper that's backed by the government. Now, lucky for us, the United States is the most powerful country in the world. It has the most powerful military presence in the world, and it has the most powerful economy in the world. Before we go any deeper in this, let me just make sure this is clear. I'm not trying to promote any conspiracy theories. I just want you to understand how your money works. That way you can learn how to use your money the right way, because that's what financial education is all about, and that's what we talk about on our YouTube channel all the time. We talk about investing your money, saving smartly, and using your money the right way. Well, if you don't understand what your money is, then the financial education doesn't really have that much value. When your dollars are not backed by anything tangible, it makes it very easy to manipulate the value of the dollars that you're working so hard to earn. I'll show you what I mean. So let's go back to this example where now I'm working really hard to earn $50,000 a year. So this is me, and I'm going to work every single day. Gotta draw me a nice mustache. I'm going to work every single day so I can make $50,000 in a year. And let's assume, for the sake of this example, just to keep things simple, that there are only $500,000 in the entire world. So I worked really hard to attract and earn this $50,000, and there's only $500,000 in the world, which means I control 10% of this country's buying power of this dollar. So I own 10% of the wealth because that's what I worked hard to earn. Now here's the thing, if these dollars are just paper and the government comes out and they say, you know what, we're going to increase the money supply and we're going to change the amount of dollars out there from $500,000 to $1 million, they have just increased the money supply, and if I don't get any of that, now I don't have 10% of the world's wealth, I only have 5% of the total buying power or world's wealth, because the amount of dollars out there just doubled because the government decided to print more money and inject it into the economy. And unless I get some of that, I just became poorer because I have the same amount of money when there's more money out there. Now, if I wanted to go out and buy myself a side of extra guac that used to cost $5 when there was only $500,000 in circulation, I'm gonna need $10 in order to buy the same side now, because you need the same kind of percentage, the same amount of wealth, the same amount of value in order to buy that guac, because now there's so many more dollars out there. It might sound like a crazy example, and yeah, it's a little bit simplified, but that's kind of how our monetary system works. Our money supply is controlled by our central banking system, which is known as the Federal Reserve Bank, and the Federal Reserve Bank has the ability to print money. So when you hear about things like the rising national debt, and you hear bailouts are happening, and you hear about stimulus checks, what that means is the government is going deeper into debt to fund whatever it is they want to do, and in order to fund their debt, they're working with the Federal Reserve Bank to print this money, and then the Federal Reserve Bank gives this money to the United States government, and then the United States government then injects this money into our economy. Could you imagine if you had your own money printer? I mean, you could walk into the mall, go to the Gucci store, and see that $400 scarf and say, oh no, I don't have $400. Let me just print a few $100, boop, 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 $400 come out, now you just got yourself a new Gucci scarf. You and I, unfortunately, don't have the ability to do that because we have to work to earn this money, but the Fed can just print money. This money printing does have consequences because now you need $2 to buy you what $1 could before. This is what inflation is. This is why your rent keeps getting more expensive. This is why your groceries keep getting more expensive. You need more dollars to have the same buying power that you had before. In the beginning of this video, I talked about why traditional financial planning methods like just saving all of your money is not such a good idea anymore because of all the money printing that's going on. And that's because now, as more and more money is printed, savers become losers because the value of your savings keep going down because each dollar cannot stretch as far. As more money is printed, the buying power of each dollar that you save goes down. If you work really hard and you live below your means and you save $10,000 to help fund your retirement and you want to be risk averse and you don't want to invest this money, so you save this money in your bank, that way you know where this cash is. Well, the $10,000 that you save isn't going to have the same amount of buying power when it comes time for you to retire. Like if you saved $10,000 back in 1970, that $10,000 in 1970 would have gone way further than it will today. Like today, you would need about $70,000 to buy what $10,000 could back in 1970. So you save this $10,000, but each and every day the buying power of the $10,000 is slowly dropping. Now, practically speaking, this doesn't mean that you shouldn't save any money. There is value to having savings, and I'll get to that in just a minute, but you need to understand what this really causes. So when the Fed prints money, they need to get it into the economy. And there's a couple ways that they can do that. So the Fed is printing some money, and the first main way that they get this money into the economy is by giving this money to banks, because banks are really involved in the money supply, and so if banks have more money, they'll be able to lend more money. The second way that you can see this money injected into the economy really only happens during crisis times. This is what you saw happen in 2008 and during the 2020 recession, where money can be injected into people through stimulus checks, or it can be given directly to companies through bailouts. So one way this money gets into the economy is through banks, and the other way is through a direct payment either to people or to businesses. But let's dive a little bit deeper into this. So interest rates are cut and banks have all these incentives to lend more money. So what happens? Well, you see two types of people. You see people like, number one, who go and borrow money and then they go out and they buy assets. So these are people that are going out borrowing money from the bank at low interest rates, and they're investing this money. Maybe they're buying businesses, they're investing into real estate, whatever. They want to get this money from the bank. That way they can make themselves richer. The other type of people, let's call this person number two, they use this money from the bank to make them broker. They're buying liabilities. So now you have these people going to the bank with all this newly funded money, and they're borrowing this money to buy a new wardrobe on their credit card, or they're buying themselves a new car, or they're buying themselves a nice fancy vacation. So now they're making money just for the bank, because they're borrowing money, buying things that don't make them any money, and now all this money and this interest is going back to the bank while leaving this person broke. Now watch this. There's a bigger pool of money in the world because there's more money that was printed, and this person is using this money to buy more assets. They're buying things that make them more money, and so they own a bigger share of the entire kind of money pot, while this person is spending all their money to buy things that lose them money. So if you even just had the same amount of money as before, you're effectively poorer than before, because now there's all this other money out there and you don't own any of the other money because you use all your money to buy things that lose you money. So this person is owning a bigger share of the pot, while this person is owning a smaller share of the pot because more money is being created, and this person buying assets is buying the things where all the money is going, and this person is the one paying for all of these assets to grow. So now you're seeing a bigger divide between the rich and the poor, because the people that understand money are the people that are buying assets, and all this new money is flowing into the assets, while the people that don't understand money are effectively becoming poorer, because even if you have some savings, your savings are not stretching as far, and if you have a job, your earnings are not stretching as far, and all of your money is going out back to the bank because you're not using your money to buy something that's actually going to make you wealthy. You have all your money going out. But it gets a little bit worse, because watch this. Now when you have these direct payments, it's going to go either to a business or it's going to go to a person. So a person would be through a stimulus check, a business would be something through a bailout. When a business gets free money through a bailout, guess who wins? It's the person who is investing in the business. It is not the average person, unless you're working for that company. But in general, if a business is getting bailed out, the people who are winning are the people who own the business, and I guess the people that work there because they continue to have jobs. So this helps the asset owners, the people that understand money. The person who gets the stimulus check, what do? Well, they take this money and then they walk on over to Amazon, or they go to Walmart, or they go to Kroger, or they go to Lululemon, or they go to Apple, or they go to Chipotle and buy themselves some extra guac. So you take this free money and you spend it back here. I'm gonna draw this kind of a convoluted way, back at the businesses. So you made this free money. This more money was injected into the economy, you got it, and then you give this money to the businesses. Now, when the money goes to the businesses, guess who's winning again? It is the asset owner, because when you own assets, you are the one making money when everybody else is spending money. And so now what's happening? You have all this more money that's created, all this more money that's printed, it's injected into the economy. Now you have way more dollars out there, but more of these dollars are getting funneled to the top, to the people that understand money. Because now when people make money, or when people get this free money, they spend it. And where do they spend it? At businesses. So now businesses have a bigger share of the pot because there's all these dollars out there and all these dollars flow into the businesses and people are spending all their money at businesses. So now businesses have a bigger share of the pot. And the people that understand money are the ones that are really benefiting because they're owning the assets. They're the ones that own the businesses. They're the ones that are investing in the businesses. They're the ones that are investing in assets where the money is flowing, versus the people that don't understand the system are becoming poorer and poorer because now, even if you have the same amount of money as before, it's a smaller percentage of the pot, so you're effectively becoming poorer because you don't own as much as you did before. Now your dollars don't stretch as far, your savings aren't as powerful, and your earnings don't buy you as much as they did once before. Now going back to the whole idea of saving money, we are seeing the lowest interest rates in the history of time. Now that's good news if you're a business or for somebody that's using this money to now make yourself more money. And it's, I guess, good news if you're this person because now your debt is a little bit cheaper, but in reality it's really not so good news because that means you're just becoming poorer because you're using more of your money to buy liabilities because you think you're saving money when in actuality you're actually just becoming poorer. But the real issue now is if you're saving your money, you're not getting any return on your savings because banks, when you have lower interest rates, banks pay you less interest on your savings. So when interest rates go down, yeah, you get a lower interest rate on your mortgage, which is nice. You get a lower interest rate on your credit card payments, which might be nice. But the issue now for your savings is your savings aren't growing either. Your savings are still, they're flat, they're dead. They're not doing anything. And so when you save $10,000 in the bank, after a few years, your $10,000 only earned you a few pennies. Let me diagram what this means. So here are your savings over time. Your savings are flat, they're dead. They're not growing because banks are not paying you any interest on your savings. But at the same time, the price of everything around you, your rent, your groceries, your healthcare bills, your vacations, everything else keeps going up because of inflation. We just talked about this. As more money is printed, the value of your dollars go down, which makes the price of everything around you go up. This is not a secret. This is public information. The Fed is openly saying that they're working hard to increase inflation. And so when they say they're trying to increase inflation, that means they're working hard to print more money to make the price of things go up. While at the same time, you know that your savings are not growing at all. So your savings are dead, the price of things keep going up, which means if you're saving all of your money, you are effectively becoming poorer because your money's not doing anything while the price of everything keeps going up. So what does this mean for you? Before I get a whole herd of comments of everybody saying, "Oh, Jasprit, are you telling me not to save any money?" Let's get this straight. Saving your money is important. You need to have an emergency fund. You need to have savings to protect you from an emergency, but you need to understand why you're saving your money. Saving your money is important as a financial cushion to protect you from you losing your job, from a financial hardship, from a crisis. That's why your savings are there. Your savings are there to protect you from going into debt when something goes wrong. If you want to be a small saver, then your goal should be to save something around 3 months worth of expenses. If you want to be in a good saving spot, then you want to save about 6 months worth of expenses. And if you want to be an aggressive saver, then your goal should be to save 12 months worth of expenses. So if you're spending $3,000 a month, just calculate it out. Now what you need to remember is why you're saving your money. Your savings are not there to make you wealthy. Your savings are there to protect you financially. Once you have your savings locked, now you need to really be investing your extra cash because you want to be on the winning side of what's happening financially. This could mean investing in real estate or businesses or stocks or commodities. It really just depends on what your investing goals are and what your risk tolerance is. The whole reason you want to be investing your money is because now you want to be the person that's owning the assets. So if more money is printed, this money flows into your assets, which makes the value of your assets go up because of inflation. And now you're on the winning side of inflation. That way you're not getting abused by the financial system. And if you do want to learn more about how you can actually start investing your money in different ways you can invest your money right now, I will link a video for you in the description below. If you don't want to be poor financially, you gotta ask yourself, why do you want to have more money? What is the driving force inside of you that wants to have more money? What's interesting is how your answer changes over time. Like when you're young, chances are you want to have money. That way you can have a nice car, you can show off on Instagram, that way you can have all the nice things. But as you get older, those nice things start to have less value, and the freedom that money provides you starts to have more value. That way you can just enjoy life, have money to spend time with your family, and just be able to be free. A simple kind of exercise that you can do with yourself to understand the importance of having money is just asking yourself, what does not having money do? What does not having money bring? Because when you don't have money, that comes with stress. Now you gotta worry about how you're gonna pay your bills. That comes with financial pain, because now you can't get your spouse what they want. You can't send your kids off to college without a whole bunch of debt, and you can't go on those nice vacations with their family. So if you don't wanna not have money, you gotta avoid the 5 habits that are keeping you poor in the first place. That's the 5 things that I'm gonna be going over in this video, but before I do that, I need you to do me a quick favor and smash that thumbs up button below. The first habit that keeps so many people poor is having a poor mindset. You might have heard people talk about the difference between being poor and being broke, where being broke is a financial thing, you just don't have any money right now, but being poor is deeper. Being poor is where you have a broke mindset. When you have a poor mindset, it doesn't matter what you do out here. It doesn't matter how much money you make. It doesn't matter if you achieve wealth on paper. You are not able to live your life because you're still poor up here. So if you want to become wealthy, the first thing you got to do is break out of this poor mindset. And one thing that you got to do that is you need to stop finding the problems with everything. You need to start finding the opportunities. You know, I don't consider myself the smartest person or the most talented person, but one quality that I think I do have is the ability for me to find the opportunity when I see a problem. I mean, that's the whole reason my minority mindset started in the first place. I was working on a sock business and I got scammed by a fake marketing company and I lost a lot of money. And then I had to make a decision. Okay, what do I do about this? Do I just complain about it and cry about it, or do I do something about it? And so I decided to come on to social media and create this Instagram page called Minority Mindset, where I help people launch a business without getting screwed over. And I created this class on Udemy, which is no longer there, on how to launch a business without getting screwed over. That eventually grew. Our Instagram page grew. And then we grew to like 17,000 followers on Instagram when I had the idea, okay, maybe I should start a YouTube channel. So now I started a YouTube channel. And interestingly, as soon as we hit like 17,400 followers on Instagram, our Instagram page got hacked and it was deleted. Now I had almost no subscribers on YouTube. I had no Instagram page, no following left on Minority Mindset. I could have ended the thing right there, but I was like, you know what? This is an opportunity for me to now work even harder on YouTube. So now I dove even deeper onto YouTube, and now we have a YouTube channel with close to 900,000 YouTube subscribers, and we're building a whole financial media company all because of a problem that I faced. Now, I'm not trying to say, look at me, look at what I did. That's not what I'm trying to say. I'm trying to say you gotta understand that all of us face problems. I talked about my worst real estate deal ever on YouTube. That way you can see the problems that I faced in real estate. Now I've been able to do much bigger deals because that problem showed me the opportunity and how to do real estate the right way. I even talked about when I got sued in real estate. That was a problem, and then I learned how to protect myself legally, and I learned how to be a better real estate investor. We are all going to face problems. That's a part of life. Now, we cannot change what this problem is, but we can change how we react to it. And the way you react to it is going to determine how you live your life. Are you going to live a wealthy life, whether we're talking about financially or just happily, or are you going to live a poor life? Look, this is reality. We cannot change what happens out here, but we can change how we react. And so if you just beat yourself up and you just blame everybody else for every problem that you have going on in your life, you are not going to improve anything, okay? So now just ask yourself, when something goes wrong, what can you do? You can complain about it, you can point fingers, or you can do something about it. These are typically the only 3 options that you have, and I want you to look at what can you do about it to better yourself, because complaining about things and blaming others doesn't get you anywhere, but doing something about it can find you more opportunities to help you live a better life. The second habit that is keeping so many people poor is you are getting too comfortable with debt. I was at the mall a few years ago. This image is like burned into my brain, and I was at the checkout counter. And in front of me were these 2 girls who were buying some clothes. And they go up to the cashier and they check out, and the cashier says, "Can I interest you in a brand new store credit card? If you get approved and you open it today, I can save you 15% off your order." The girl said, "Yes, that would be great." And then he goes away to go see if they can get approved. And the girls literally started praying in front of me saying, "Please God, help us get approved for this credit card." The guy comes back and he says, "Good news, you've been approved and you can save 15% off your order today." And the girl started jumping up and down because they just saved save 15% on their order because of this brand new credit card. Now, look, credit cards can be a great tool. Like, I only shop with my credit card. But when you're getting a credit card just so you can save 15% off your order, chances are you're not using a credit card for the right reasons. Chances are, if you're one of those people, you're going to be going into credit card debt because a credit card to you is just a free money printing machine, and now you can buy whatever you want and pay it later. And you know what? This is the society that we live in, and it's only going to get harder. There are more and more companies coming out to help with this whole idea of you being able to buy something now and pay later, which means you get to be broke now and broke later. You've probably seen it if you shop online. When you go to the checkout page, there's a little button that says, would you like to pay for this order in installments? What does that mean? Now you don't got to pay all this money today. You just pay it off in 6 months and add a little bit of interest on top of it. Back in the day, you'd hear people talking about getting big mortgages and then financing the car and then maybe using a home equity line of credit to buy a boat. Nowadays, it's a little bit different because people are not just financing your home, your car, and your boat, but you're financing your clothes, your furniture, your electronics, your cell phone, your laptop, and everything in between. And let's not get started with student loans. I graduated with kids who had 6 figures, more than $100,000 worth of student loans, graduated school making $14 an hour. This habit is going to be hard to break away from because our society is going deeper and deeper and deeper into debt, where it's just completely normal to be drowning in debt. That's just what everybody does. And so now if you want to go on a nice vacation, you don't gotta wait until you can actually afford it. You just put it on your credit card, or you just finance it or pay it off in installments because that's what everyone else is doing. You wanna go on a nice vacation? Go ahead, pay for it later. Now you're spending the rest of your life paying off that trip to Cancun, plus interest. But at least you got to eat some guacamole. The third habit keeping you poor is sticking around in a toxic environment. The internet is great because it has opened the doors to opportunity and education to everybody in the world who has access to the internet. But the downfall with the internet is if you get sucked into this negative or toxic environment, you get sucked into this deep rabbit hole where it gets really hard to get out because now you're surrounded by people not just in your real life but also in this digital life of everybody who just keeps talking about gambling and blowing your money and spending your money and all these things that are not helping you achieve wealth. They're just keeping you poor. We all want to have a sense of community, and I'll talk about our physical real life communities in just a minute, but we all want to have this community in our digital life too. And so people get drawn into these digital communities, whether it's in investing or sports betting, and the communities that get the most traction, that are the most hot, are typically the ones that involve the most risk. You have a lot of people jumping into the stock market, which is great, but you have a lot of new people entering the stock market to trade these high margin option trades, even though many of these people have never traded a stock or invested their money a day in their life. It's the same with sports betting. We have this whole new industry of sports betting with companies like FanDuel and DraftKings that kind of create this community around people betting their money on sports. When you gamble, it doesn't matter what the odds are. At the end of the day, the house always wins. If the people all around you, whether we're talking digitally or physically in your real life, are all broke, are all drowning in debt, and are all making bad financial decisions, what do you think you're gonna do? Because when you're in that community, when you're in that toxic environment, these things are normal. It is normal for you to be paycheck to paycheck, and it's abnormal for you to save money and invest money. And so now when you're in that toxic environment, it is just normal to continue being broke and continue complaining about life. But if you can transplant yourself from this environment to a different environment where people are talking about investing and living smartly, especially when it comes to finances, now if you're talking about gambling and living paycheck to paycheck, you're not gonna fit in this community because this environment doesn't want people like that. That's why your surroundings and your environment play such a big part in how you live your life. And if you want to go from this toxic environment to this growth environment, the first thing you got to do is you got to start learning. Because if you just start going into these other people, they're not going to know who you are, they're not going to want to talk to you. And so the first thing you got to do is start learning. Start reading books, change this environment you're in the digital world. Start watching good YouTube videos where you're actually learning things, you know, minority mindset. Start learning things that will help produce a more growth mindset and a wealth building mindset, because now you're going to start thinking differently. You know, I think we all kind of have to go through this transition phase and kind of change who we're around, because the people who we're around when we're younger might not be the people that's best for us as we start to grow. Because when I was younger, when I was in college, a lot of my friends were all about blowing their money, having all these nice things, having this kind of real exotic looking life. And as I started to realize that's not for me, that's when I had to start taking a step back and distancing myself. And I did that especially after I started reading these books, talking about this other life that I have never experienced. And that's when I started looking and kind of started this new journey, and new people started coming in my life naturally. Plus, the easiest thing that you can do is change what digital environment that you're in. What are you absorbing on the internet? Because as you do that, you're going to find new digital communities that will help you grow. The fourth habit keeping you poor is your priorities are all in the wrong place. Because what happens to a lot of people is they prioritize making money. But you don't understand how money really plays a part in your life. Because yeah, money is important, but at what cost? Because you know what? There's other assets in our life that are more important than money, like time. You can always make more money. There's no limit to how much money you can have, but there's a limit to how much time that we have. And so now one of the things that you got to do if you want to stop being poor is you got to start valuing your time more, because your time is your most valuable asset. If you do not treat your time wisely, it doesn't matter what you're doing with your money. There's a couple ways that I want you to look at this. The first is really just a straight financial perspective. If you can make $20 an hour from working at your job or wherever you're working, and you are spending a lot of your time doing things that are not making you at least $20 an hour in value, like you're mowing the lawn, which you don't like doing, and you can pay somebody else to do that for $10 an hour, now you are losing out on the opportunity to make an extra $10 an hour, because you can just pay somebody $10 an hour and work an hour and make $20. So the first thing you gotta do is start putting a price on your time. Because if you're spending all your time doing things that are not producing any value for you, whether we're talking about cutting the grass, where you can hire somebody to do it at a cheaper cost than you could do it, or we're talking about playing video games all day, well, now you gotta put a price on your time and see how much money you're throwing away by not using your time. The second part of this coin is you gotta know how to use your time in the most efficient way possible, because there's only 24 hours in a day and you cannot work 24 hours. So you gotta understand how can you extract the most value out of your time, that way you can attract the most money. This is where you gotta understand the difference between active money and passive money, because active money is where you're physically working to earn money. This might be you going to your job. There's a limit to how many hours you can work, because you gotta sleep, you gotta go to the bathroom, you gotta spend time with your family. So there's a limit to how much active money that you can earn. But there's no limit to how much passive money that you can earn, because when you talk about passive money, this isn't money that you're physically working to earn. This is money that you're attracting thanks to your money. So when you earn this active money, you wanna take some of this money and send it off to attract you this passive money. That way, now you have more money coming in and you're using your time the best way possible, because you're using the time to attract this active money, but you're also getting this passive money without having to physically invest more of your time. But in order for you to attract this passive money, you gotta understand the number 5 thing that's keeping so many people poor. You're not paying yourself. Interesting, right? We're talking about the habits that keep people poor, and only now are we talking about how you pay yourself. When the majority of people make money, they get paid, then you gotta pay your taxes because the IRS wants their cut. And now, with the money that you have left, you're gonna pay your rent or your mortgage, you're gonna pay your car payment, you're gonna pay your student loans, you're gonna pay for your utilities, you're gonna pay for your phone bill, you're gonna pay for your laptop, you're gonna pay for your furniture financing plan, you're gonna pay to go out with your friends, you're gonna pay for this vacation that you went on last year, and then, if there's any money left, you're gonna save it. But that's why we don't think like the majority of people. I mean, that is why we're the minority mindset. Because if you want to not be poor, you gotta know how to use your money the right way, and that includes paying yourself before you pay everybody else around you and before you make everybody else rich. When you pay a housing payment, do you wanna know who's getting rich? It's not you, it's your bank or your landlord. When you pay a car payment, do you wanna know who's getting rich? It's not you, it's your car company or your bank. When you pay your phone payment, do you wanna know who's getting rich? It's not you, it's your phone company. When you go out to eat, do you wanna know who's getting rich? It's not you, it's the restaurant. Before you go out and you make everybody else rich, I need you to start using your money to make yourself rich first, and that means paying yourself before you pay everybody else. Now, when I say pay yourself first, I'm not saying reward yourself. I'm not saying go over to the mall, go to the Gucci store and buy yourself a brand new scarf, because the person that's getting rich when you buy that brand new scarf is not you. It's the Gucci store. I mean pay yourself, that way you are getting rich first. So when I say pay yourself, the first thing you gotta ask yourself is, who's getting rich when I pay myself? Psst, the answer is supposed to be you. The way you do that now is every time you get paid, I want you to take a little bit of money and put some aside for your savings. That way you have cash in case an emergency happens. That way you never have to worry about going into debt again. And then I want you to take some cash and put it towards your investments, because now you want to buy some assets, some investments that are going to pay you for owning them. An asset will be something like investing your money in the stock market, or investing in real estate investment properties, or investing in a business. Now, when you're investing your money money in these assets, you're doing it for the purpose of making money, because now when you own these assets, you are the one that's getting paid. You can compare that to something like a liability, which is where now you're going to the mall, you're buying yourself a brand new wardrobe, or when you buy yourself a nice car, or when you go on a nice vacation. These things are nice and they make you look rich, but they keep you poor, because now when you buy these things, you are giving your money to somebody else and you have no money coming back. With an asset, you're giving your money to this thing, that way you own this asset, that way now you can keep having more money come back to you. This is the financial part of becoming wealthy, because if you do not do this, I don't care how much money you make. I don't care if you make $1 million a year, you're gonna continue to be poor, because when you're paying everybody else before you pay yourself, even if you make $1 million a year, you might have really nice stuff. You might live in a big house, you might drive a fancy car, you might wear expensive clothes, you might go on exotic vacations, but you have nothing left for yourself, because if that income went away, if your money went away, what are you left with? Nothing. You have a whole bunch of liabilities that you cannot get your money back from, because when you own a liability, you buy yourself a brand new car. Guess what? If you go to sell that car 3 years later, you're gonna get pennies for what you paid for it. Wealthy people get rich and stay rich by living below their means, and always, no matter how much money they make, always putting money aside to pay themselves first, because if you want to become wealthy and if you do not want to be poor, you have to prioritize your wealth before you prioritize everybody else's wealth. So before you pay Apple, before you pay Lululemon, before you pay Chipotle for the extra guac, before you pay Gucci, you got to put that money in your wallet. You got to put that money in your assets. That way you can build your wealth before you make everybody else rich. You might think that you're the one driving your car, but in reality, for a lot of Americans, your car is the one driving you. I want to start by going over the real cost of your car. So the average new car payment in America is $554 a month. This is how much people are paying for a new car right now in America, and the average lease payment for a car is $487 a month. So I want to be conservative, so I'm going to do all the examples assuming we go with this lower amount, this $487 a month for a car. So you have the average person in America making something like a $487 monthly payment on their car, which will get you something like a $27,000 car. But the interesting thing about this car payment is your car is a triple threat. You are paying interest on a car which you have to pay to maintain every single year, which depreciates in value. What that means is, yeah, you bought this car as a $27,000 car today, but when it comes time for you to sell this car, you're not gonna get anywhere near $27,000. Cars are liabilities. What that means is the longer you own it and the more you drive it, the less your car is gonna be worth. You can compare that to something like a stock or a house, which are assets, where in general, the longer you own this thing, the more it's going to be worth. Cars, on the other hand, just take money out of your pocket every single month because you have to pay interest, you have to keep paying money to maintain it, and this car is losing value every single day. So you're paying $487 a month and you're getting a car with a heated steering wheel. That's pretty cool. But if you took that same $487 a month and you invested this money into, let's say, a low-cost index fund that was paying a 7% annual return. So this is not something super aggressive. We're talking about an average 7% return a year. After 5 years, this $487 monthly investment at the 7% return would grow to $36,000, while the value of your car would come down to $11,000. So after 5 years, this is what your money would look like. Your investment would have been $36,000, but you wanted a heated steering wheel, and so your car is only worth $11,000. So this is what you get if you invest your money, and this is what you get when you want heated seats. Now, let's keep going with this. Let's say you do this for 10 years. So after 10 years, your investments won't be worth $36,000. They'd be worth about $87,000, assuming you get the same return. And your car and your heated steering wheel would be worth about $4,500. If you do this for 40 years, now, so 40 years, your investments would be worth over $1.2 million, and your car would be worthless. And by this time, who knows what's gonna be out? Heated steering wheels might not be a thing then. You might have some chip in your hands that keep your hands warm. If you have $500 to put towards your heated steering wheel every single month, but you don't have $500 to put towards your investments, something is wrong. And at this point, you're probably thinking, but Jaspreet, how am I supposed to get to and from work? Hold that thought. I'm gonna get to that in just a minute. But when we posted this concept on Instagram, where we said if you invest $400 a month and get a 7% return, you will be a millionaire in 40 years, we got two kinds of responses. The first kinds of people said, oh, I don't want to wait until I'm 40 years old to become a millionaire. And the second people said, where am I supposed to invest an extra $400 a month, Jaspreet? Let me start by answering the first part. But before I do that, I need you to do me a quick favor and smash that thumbs up button below, because at this point, a lot of people are getting triggered and probably smashing that thumbs down button. So if you want to help balance that out, help me by smashing that thumbs up button below. If you're given two choices, you can either be a millionaire today or you can be a millionaire when you're 70. I would pick being a millionaire today. Who wouldn't? But the problem is the majority of people are broke today, and they're going to continue to be broke or just above broke when they're 70. Baby boomers are in their mid 50s and mid 70s right now, and many baby boomers do not have any money saved for retirement. And if they do have money, it's nowhere near what they need to retire and live financially free, or even something remotely close to financially free. So yeah, maybe you don't want to wait 40 years to be a millionaire, but in my opinion, now I know, I'm just a random guy on YouTube, so what do I know? But in my opinion, I would rather be broke now and rich later instead of broke now and broke later. If I can't be a millionaire tomorrow, I'd rather be broke forever. By the way, if you're really concerned about waiting 40 years to build this type of wealth, you don't have to wait 40 years. There's other things you can do, and I'm gonna be talking about that in just a minute. Second, people kept talking about how they didn't have $400 to invest in building wealth in their future. Yet, you have $400 to invest into a heated steering wheel every single month, which is a money trap, which is keeping you broke, which is keeping you from becoming wealthy. And actually, the average person is paying a whole lot more than $400 a month, especially when you start adding in upgrades and premium gas and insurance. You're already spending this money. The issue is right now, this money is going into somebody else's pocket and it's making somebody else rich. It is not making you rich. So what I want you to do right now is shift where this money is going and put it into your own pockets. That way you can make yourself rich first. That way you can buy your dream car and not worry about the price. Okay, Jaspreet, but then how am I supposed to get to work? If you're subscribed to our YouTube channel, you know that I love nice cars. And if you're not subscribed to our YouTube channel, you should probably do that. But what you might not know about me is that for the last decade or so, I have been driving the same beat up 2007 Toyota with like 170,000 miles on it. The car might be worth $1,000 on a good day, but it drives just fine. There's no issues with the car. I mean, it has dents and scratches, and I got 2 different rims on the car, but it takes me everywhere I gotta go, and it's safe, and it's saving me a whole lot of money. I can afford to drive a much nicer car. I'm not saying this to brag, but I make good money. I mean, tomorrow morning, I could go to the car dealership and buy a nice supercar, pay them 6 figures in cash, and it wouldn't affect me a bit. And you know what? I will be driving a nicer car one day, maybe even soon. I like nice cars. But I chose not to spend that money over the last decade because all the money that I haven't been spending on my car has been going towards my investments and growing to build my business. I understand that my car is a money trap. If I took $200,000 and I bought a nice car tomorrow, I would look really sweet and I would have a nice car. But the $200,000 that I spend on my car is going to be worthless in 40 years, and it's actually going to be worthless closer to 10 years if it's a supercar. But if I invested this money in my business or an investment, I know that I can build wealth with it. Look, I understand that I'm young and I have the power of time on my hands, which is why all of my focus is on building, not looking sweet. And as I get older, I'm gonna start shifting it a little bit. When you build your pie bigger, you can take out a smaller chunk and live a whole lot nicer. If you're worth $10 million and you take out just 1% of it to drive a car, you're gonna drive a much bigger car than if you're worth $100,000 and you took out 10% of that to buy yourself a car. Most people are not gonna understand this. That's why I call it the minority mindset, because we think different than the majority of people. Most of my friends are always joking around about my car, but the numbers speak for themselves. Car companies spend $35 billion a year to sell you the idea that if you drive a nice car, you're gonna have a great life, you're gonna have an awesome family, and your neighbors are gonna be jealous jealous of you. But what they don't tell you is the real cost of your car, because the cost of your car isn't just $400 or $500 a month. The real cost of your car is your future wealth. I'm not saying don't own a car or don't drive a nice car. I want you to drive a supercar. I want you to drive that luxury car. I want you to drive something nice, but I want you to be able to afford it first. That way you don't gotta worry about the price, and that way you're not sacrificing your future freedom. You need a car. I get it. What I'm saying is, do you really need a car that's costing you $400 or $500 a month? What I'd rather have you do is go out and buy a used but good working condition car with cash. That way you don't gotta worry about the monthly payments, and now you got a car that takes you from where you gotta go, and you got the extra cash in your pocket that can build your wealth. Leasing is almost never the smart financial decision, so leasing should be completely out of the question unless you are worth at least $1 million. Financing is never the smart financial decision when it comes to buying a car, because when you finance, you're paying interest to own a depreciating liability. Cars don't make money, they lose you money. And if you have to pay interest to buy something that is losing your money, you're losing money twice. You're losing money in the value of the liability because the car value is going down, and you're losing money by paying interest to own something that is losing you money. Buy used, use your extra cash to build wealth, and now when you have this wealth, go out and buy whatever car you want. It doesn't matter because now you can afford it and the price doesn't even matter to you. Earlier in this video, I talked about how you can build this wealth faster than waiting 40 years to do that. Now we talk a lot about this on our website, theminority-mindset.com, and I will also link an article for you up here and in the description below. But there's two things you can do to amplify this process. You can either invest more aggressively, that means put in more than $487 a month, or you can grow your money faster. If we're talking about investing more money, then you can either cut more expenses, that way you have more money to spend, or you can raise your income. That could mean looking for a new job, or asking for a raise, or getting a promotion. If you have more money, then you can put more money towards the investments. That way you can build your wealth faster. Or the alternative is growing your money faster than 7% a year. I said this 7% a year because this is a completely passive investment. If you went out and you threw your money into a low-cost index fund, which is a fund that gives you exposure to the stock market, now you're not doing anything. You're just throwing your money into this fund and you're letting the stock market do its thing. This is where people say, oh, where are you ever going to see a consistent 7% return on your money every single year? And yeah, you're right. You might not see a 7% return every single year. One year you might see 4%, one year you might see 5%, one year you might see negative 2%, but other years you might see 8%, 9%, 10%. And so over the long run, this is what we've seen on average in the stock market. If you want to beat the 7% return, it's very possible, but it's not going to be as passive. This is a passive investment where you're just throwing your money into something and then you're walking away and you don't do anything and you just let your money grow. If you now invest your time along with your money, you can grow your money a whole lot faster. There's a few different ways you can do that to get the better returns. One way is to be more active in the market. So now you're trying to find growth companies and you're actively trading them. That way you can get a better return. It comes with more risk, but it also comes with the opportunity to make a better return. Or the alternative to that is you can start your own side hustle, because now you're investing your money and your time into this thing, the side hustle, that can grow way faster than 7% a year. If you took $1,000 and you went out and you started a side hustle, the side business, there's a chance that you can make the $1,000 back within 6 months. That's way better than a 7% return. And if you continue to grow it, that $1,000 investment that you put into your side hustle could become a $1,000 a month return, or it could be a $1,000 a week return. That is way higher than a 7% annual return with a passive investment. Now again, starting your own side hustle or starting your own business comes with risk and you can fail. But if you really want to amplify your wealth, there's only two ways to do it. You can either grow your money faster or invest more money. If you want to invest more money, you need to have more money. And if you want to grow your money faster, you got to take more calculated risks. Everybody says they want to be wealthy with their mouths, but the real question is, how bad do you want it? What are you willing to do to make it happen? If you're not willing to take the risks or make the sacrifices, I'm sorry, it's never going to happen. 78% of Americans are living paycheck to paycheck. That means if you walk out of your house right now and you look down the street and you look at your neighbors, 8 out of 10 of your neighbors don't have a couple $1,000s in their bank account right now to protect them from a financial emergency. It doesn't matter where you live. This is the reality of what's going on in America right now. The majority of people are broke. I know this is going to hurt a lot of people's feelings, but there's a lot more to this than just how much money you make. I've talked about people like Earl Crawley on our YouTube channel who make minimum wage and yet have built a multiple six-figure investment and savings account while having kids, while living a life. And then on the other hand, I've also talked about people like Henry's. If you remember, Henry is an acronym that stands for High Income Earner Not Rich Yet, and it's this movement of people that make at least 6 figures a year that are broke because their goal right now is not to save money or invest money, but to live this lavish lifestyle where they're spending all their money to look rich. This is where the vast majority of people get kind of offended, and they put up the smoke screen and they say things like, oh, you shouldn't talk about money like that and you shouldn't worry about money, when in reality, we all use money every single day. If money really didn't matter, then why are you going to work every single day to get a paycheck? Now, I get it. There's a lot more to life than money. Okay, money is just one small aspect of our life. But if you don't understand money, and if you don't have money, you become a slave to money, because now you're drowning in debt and you have all these payments that you can't afford. So you're going to work every single day, not to enjoy your life, not to do something fulfilling, but just so you can make your back payments. But if you understand money and you know how to use money and you can grow your money, now you can build your wealth. Now you can take care of yourself and your family financially, and you have more money to help other people and to help your community because you have the resources to do that. If you're broke, you don't have the resources to help other people. When you're broke and you're drowning in debt, the only person that you're helping is your bank, because you're paying these insane rates on money that you borrow to buy things that you didn't even need. So many Americans put a lot of weight on luck when it comes to success, and I'm speaking strictly financial success right now. They see somebody who's become wealthy or rich and they say, oh, this person must have become wealthy. They must have inherited the wealth, or they must have just got lucky with their business or their investments or whatever. Luck is the reason why they're successful. If that was the case, why is it that 88% of millionaires are self-made? That means these are people who did not have millionaire parents. These are people who created their millions themselves. 9 out of 10 millionaires out there that are millionaires made it themselves. This is where you can say, oh, they had an advantage, or they had this, or they had that. We can spend the rest of our lives looking for advantages that other people had as to why they could become successful, or you can spend that same time understanding how to use your money the right way. That way you can build your wealth, because there's a system to understanding how to use your money. The first thing you got to do is get your mindset right. I talked about this a little while ago on YouTube, but I was at Speedway getting gas, and Speedway actually had this video on their screen that was talking about how they let you buy lottery tickets with credit cards. And I went in because I needed to get a pack of gum, and there was a lady there who was frantic, who was freaking out because her credit card got rejected when she was trying to buy like $150 worth of lottery tickets. She was buying dozens and dozens of lottery tickets because this was her kind of hope of becoming successful. Spending all your money on lottery tickets or financing this lottery tickets is gambling, and it's a straight path to broke. Not only are you not going to win, but now you're going to be spending all your future paychecks paying off these bad decisions. Wealth is a long-term game, and if you really want to know the secrets to not being broke and the secrets to becoming wealthy, there's 5 things that you need to understand. These are the 5 things you have to understand. First, you got to stop living in a net zero life. Second, you got to avoid the money traps that are out there. Third, you need to know how to grow your money and grow your wealth faster. Fourth, you gotta stop living in this game of the fake flex. And 5, you need to understand the game of how money works. These are the 5 things I'm gonna be going over in this video, so make sure you watch this video until the end. First, let's talk about living this net zero lifestyle, because this net zero lifestyle is keeping the majority of people broke, and it is holding you back from becoming wealthy. The way it works is like this. The majority of people think, okay, I have $100 in my bank account right now, and if I have $100 in my bank account, that means I can go out and I can spend $100 on a pair of shoes because I have $100 in my bank account. If I have $100, I should be able to spend $100. This is net zero thinking, because if you have $100, you can spend $100. This mindset kills people's wealth, because if you have $100, you cannot afford to spend $100. This is why I keep saying that your income is not what determines if you're going to become wealthy or not, and your income is not what's going to determine if you're going to live broke or not. It's what you do with your money. If you make $100,000 and then you spend $100,000, guess what? you're broke. If you make $20,000 a year and you spend $20,000, guess what? You're still broke. The very first thing you have to understand is you are not allowed to spend every dollar that you have, because some of your money needs to be saved to protect you from emergencies, and some of your money needs to be invested to help build your wealth, okay? If you have $100 in your bank account, you cannot afford to spend $100. This becomes even more true if this money that's in your bank account is not yours. So when I was in law school, I had this friend, or acquaintance rather, that was in my law school with me. And I was talking to him one day about what his plans were for the evening, and then he told me that he was going out to buy a really nice umbrella. I thought it was kind of funny that his evening activity was to buy an umbrella, but I understand it because, you know, we're in a rainy area and it's not fun to go walk around when it's wet outside. So I told him that I bought my umbrella from Home Depot and I paid like $5 from it. And he told me, now remember, this is when we were in law school, okay? He did not have a job. He told me that he wanted to go out and buy this really fancy $400 umbrella. He showed it to me on his phone. And I was like, $400 for an umbrella? Who spends $400 on an umbrella? And he told me that he had this extra cash from his student loans in his bank account, so he wanted to use this money to buy and invest in this umbrella. So when he goes to these attorney interviews, he's gonna look really fancy with his $400 umbrella in his hand. That is net zero thinking on steroids. Now you assume, oh, I have $400 in my bank account, even though this money is not yours. This is money from the bank, and you feel like you need to spend this money because this cash is in your bank. When you live this lifestyle of spending every dollar you have in your bank, whether it's your money or someone else's money, it's even more expensive when it's someone else's money, but when you have this need to spend every dollar you have on things that don't make you money, like an umbrella, you are going to be broke. The solution to this net zero thinking is to create a system where you are not allowed to spend all the money you have. You have to create the system where you know that you have to live below your means. This is where our rule of 5 comes into play. Our rule of 5 says if you cannot buy 5 of them, you cannot afford 1 of them. So if you have $100 in your bank account, and we're talking about things you don't need to survive, if you have $100 in your bank account and you want to go buy something, you can only afford to buy something that costs $20. Because if you have $100 in your bank account, this $20 thing is what you can afford to buy 5 times over. So if you cannot buy it 5 times, you can't afford to buy it 1 time. Second, let's talk about money traps to avoid, because the majority of Americans are broke and will never build wealth because they're spending money they don't have on things they don't need, which will never make them any money. Sometimes this is obvious. Like I just gave you that example of that person I knew in law school who had money from student loans. This money was not his. This is the bank's money that he spent to buy an umbrella, right? But sometimes this money trap isn't so obvious. When the majority of people say that they can afford something, what they actually mean is I can make the monthly payments. But that's very different than being able to afford something. The simplest example of this is your cell phone, okay? Your $1,000 cell phone that you have in your pocket. So many people are financing this phone on $20, $30, $40, $50 monthly payments because they cannot afford to pay $1,000 for a phone. So they think, oh, I can afford this phone because I can pay $50 a month with 0% APR financing, so I'm not paying any extra money in interest and I can afford this phone, right? But this is a money trap. What happens when you finance something that you can't afford, that you don't have the cash to buy up front? Well, now you're going to be paying this $20, $30, $40, $50 a month for the rest of your life, because every year you're going to get into this trap of buying a brand new phone. And then secondly, you never have the pain of this money leaving your wallet. You think that you just bought a $1,000 phone, but you never had the pain of $1,000 leaving your wallet. All you saw was $50 leaving your account every single month. And so you think now, oh, I bought this $1,000 phone and it's only costing me $50 a month. So let me go and buy this $2,000 laptop that you can't afford, but it's only $85 a month. So now you buy that. And then you buy the sofa that you can't afford because that's only $75 a month. And now you're spending money on things that you can't afford because you think you can live way up here, but you can actually afford down here. You thought you were being financially smart by paying 0% APR, but you just got played, because now you're spending more money on things that you don't need because you never had the pain of money leaving your pocket in the first place. The reason 0% APR is so profitable for businesses is because when you buy things with 0% APR, you never have the pain of money leaving your bank. And so now you can buy a whole bunch of things that you didn't know that you can afford because you can't actually afford it. All you think you can afford is the monthly payments. There's a difference between being able to afford a smartphone and being able to make the monthly payments. There's a difference between being able to afford a brand new car and being able to make the payments. You need to start being able to afford the things you buy, not not just making the monthly payments. The goal with the first two things that I talked about, not living net zero and avoiding money traps, is all so you can grow your money and your wealth faster. If you follow the first two things that I just talked about, you avoid net zero, you avoid these money traps, what you're gonna see happen is all of a sudden, you're gonna find extra money in your bank account out of nowhere. Now, what you wanna do with this extra money is you wanna put some of it to work, that way you can grow your wealth faster. There's two terms you need to understand: assets and liabilities. I've talked about this before, so if you haven't subscribed to our YouTube channel yet, make sure you do that. But what you need to understand are assets are things that put money in your pocket. Liabilities are things that take money away from your pocket. Your $400 umbrella, your shoes, your lottery tickets, all these things are liabilities. If you're spending money on something and it's not putting money in your pocket, or if you're not buying it for the sole purpose of making money, it's a liability. The interesting thing about liabilities, though, is liabilities make you look rich, right? When you go out and you buy a fancy new wardrobe, you buy new shoes, you buy a new purse, you buy a new cell phone, you buy a new watch, all this stuff makes you look rich. And so this is what broke people do. Broke people spend all their money on liabilities, that way they can look rich, but they're actually just product rich. You look rich, but you're actually broke because you have no assets. If you want to become wealthy, you got to flip this around. You need to start spending more money on assets, which are things that pay you for owning them. And then once you have more money coming in, then you can afford to buy these liabilities. The first time I really understood this concept of assets and liabilities was when I first started investing in real estate. I was running this event planning business and I had money in my bank account, and I really wanted to buy this BMW. It was the 3 Series, and I really wanted to buy a 3 Series because it looked sweet and it would look really cool with my image. But then for some reason, I was reading books and every book talked about how wealthy people own real estate. I had no idea what real estate investing was. I didn't grow up with real estate investing family members, but I decided, I wanted to try this out. So instead of using my money to buy a car, I ended up buying a small little condo. This condo, as soon as I bought it, about a month later after renovating it, I rented it out for $600 a month, and after paying all expenses, I was left with $250 a month in profit every single month, and I didn't have to physically do any work to get this $250 a month. This was passive income I was getting because I spent my money buying an asset instead of using my money to buy a liability, which was a car. Assets are things that put more money in your pocket. These are the things you need to buy if you want to build wealth. Liabilities are things that make you look rich, but they keep you broke. So now if your goal is to become wealthier faster, you got to spend less money here and buy more assets aggressively. And it doesn't have to be a ton of money to start. You can start with $5 a day or $5 a week or $20 a week, whatever you have. You just got to make these small incremental investments. That way you can buy these assets and build your wealth faster. The reason it's important for you to be buying these assets instead of just keeping your money in your bank account is because at the end of the day, when you're working to make money, you physically are working to make money. When you save money, your money is just sitting like this. It's flat. Your money isn't doing anything. The amount of money you have in your savings account today is going to be the same amount of money you have in a year, assuming you don't take any money out or put it in, right? So if your money is in your savings account, it's just sitting there. But you can't physically always be working, right? You want to live this life where you have other sources of income coming in. This is where assets come in. When you invest your money, you can see your money grow like this. It grows quicker than your money in your savings account, and it grows without you physically having to earn this money. You're using your money as a tool, kind of like a magnet, to go out and attract you more money. And if you want to attract more money, you need to be buying more assets. The more money you put in here, the more money you're going to get back. A simple rule of thumb to help you out with this, if you want to build more wealth faster, is to follow our 5-to-1 rule, which says for every $5 you spend on liabilities, spend $1 buying assets. If you spend $5 at Chipotle, spend $1 investing in Chipotle. If you spend $100 at Amazon, spend $20 investing in Amazon. Now, if you do want to learn more about money management and investing like this, that way you can grow your wealth faster, we have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. Fourth, you gotta stop living this fake flex lifestyle. We're living in the day and age of social media where people live their lives based off of what they see on Instagram. Look, more than half the stuff you see on Instagram is fake. There are people that are going into debt to finance the perfect Instagram page because people are going into debt, borrowing money to buy things, that way they look cool on Instagram. This has turned into a game of chicken where people are competing against each other to see who can go bankrupt first. Just because somebody has something doesn't mean they can afford it. Okay? Remember the things that we talked about in this video? The majority of people are broke. Just because your friends are showing off the things that they just bought doesn't mean that they can afford to buy those things. Life doesn't have to be a competition. These big companies want it to be a competition because they know that if all your friends are competing against each other on what you own, you're going to be spending more money at these companies, but it doesn't have to be a competition. You don't need to go out and spend all your money and make every company around you rich. Use your money to build your wealth first. This brings me to number 5. You gotta understand the game, okay? Everybody in the world is after your money, okay? This does not mean that businesses are evil or that they don't deserve to exist. This is just how the game works. Businesses want your money. Apple wants you to buy their AirPods. Lululemon wants you to buy their leggings. Chipotle wants you to buy their extra guac. What you need to do is create this filter, okay? The whole world is asking you for your money. What you need to do is have this filter in place. That way you know what is worth spending money on and what is not spending money on. Because right now, what the majority of people do is they don't have this filter. When they see something they like, they just spend their money. They don't have this filter. You need to know what's worth spending money on and what's not worth your hard-earned money. The goal is not for you to live small for the rest of your life, okay? The goal is for you to live bigger and expand your means. But the only way you can do that is if you have more money for yourself. That way you can invest more money into yourself. That way you can have more money attracting you more money. And when you have that, that's when you can go out and live a bigger lifestyle. You can buy the nicer things. You can have the nicer car. You can have the bigger home. But in order to do that, you need to make sure you can afford it first. That way you're not stressing about the payments. The goal of the game is to become wealthy. That way you can buy all the nice things you want without worrying about the price. But you can never do that if every time you make a buck, it's constantly just going out. You need to know when it's worthwhile for you to part with your money. But this also goes both ways, because once you understand the game and you understand how money works, that's when you're going to want to fuel your financial system, because now you understand, okay, I need to use more of my money to buy assets, investments, which are things that pay me. And if you really want to ramp that up, then you're going to need more money coming into your financial system. That way you have more money to invest and you have more money to grow your wealth faster. And the only way you can do that is to come onto this side of the equation, the producer side of the equation, and learn how to create more income. This is going to depend on what you like. Maybe you're just going to work overtime at your job. You're going to try to get a promotion. You're going to try to get a raise. That way you can earn more money. For some of you, this might be starting a side hustle. Maybe you have a side cake business. Maybe you become a freelancer. You just have this thing on the side that you do to earn more money. That way you can build your wealth faster. And for some of you with the entrepreneurial bug, this is the opportunity for you to go out and understand how to create value. That way you can create a product that people need that improve people's lives. The name of the game is not spending money whenever you can and then trying to find steals or deals that are not actually deals. One time I was at the mall before this whole pandemic happened, and there were these 2 girls in front of me in the line to check out, and the cashier asked them, would you like a store credit card because you're going to save 15% off your order? I forget which store this was now. Maybe it was Macy's or JCPenney. And these 2 girls were like, yeah, that would be great. And then the cashier starts looking up the credit information, and these girls were literally praying that they would get approved for the store credit card. And when the cashier came back and said that you're approved, they literally started dancing with joy, right? When you have that, you are just being bombarded with these places, these companies that want your money, and you're just giving it to them as soon as you have the opportunity. You got to stop living like that. You need to understand the game. That way you can keep more money for yourself and build your wealth first. You and I all use money every single day, but most of us never grow up learning how to actually use our money the right way. I can't say this for sure, but I have a hunch that this lack of financial education might be why 1 out of 4 Americans say that they worry about money all the time. In this video, I'm going to be going over 10 things that you should not do with your money, and it all starts with avoiding get-rich-quick schemes. Hey, you want to get rich? Yeah. You want to get rich fast? Yeah. You want to get rich fast without doing any work? What's the secret? It's simple. All you gotta do is buy my proven secret system on how you can get rich in 60 days without doing anything. Online courses are great. I spend a ton of money every single year on online education. But if you're spending money on online courses and online education, make sure what you're buying is going to teach you a specific skill or help you develop a specific skill, because you want to learn how to improve your financial education or how to invest your money in stocks or how to invest your money in real estate. You don't want to go and try to buy a system that's going to make you rich without you doing anything, because the only person that's going to make rich is the person selling the system. It's the same as spending money on lottery tickets and gambling, because now you're hoping that the universe is going to come from above and it is going to give you free money. When you go out and you buy a Powerball ticket hoping you're going to get rich, you have a 1 in 292 million shot at becoming rich through winning the lottery. So are you saying I still got a shot, Jasprit? You have a better chance of walking outside of your house and getting crushed by a meteor than you do of winning the lottery. You also have a better chance of becoming the next president of the United States than you do of winning the lottery. Okay, in the financial world, they call the lottery an idiot tax because the people that blow all their money on lottery tickets are, well, let's just say they're not very financially educated. Lucky for you, you are not going to be one of those people because you are watching the minority mindset and you don't think like the majority of people. And this same concept also applies to gambling. Have you ever wondered why so many people from around the world want to come to Las Vegas? It's because they want to see all these buildings and skyscrapers and they want to see the entertainment capital of the world. But the way that these buildings and skyscrapers are getting all the cash to fund these buildings and skyscrapers is because so many people are losing money in the casinos. Gambling is a losing game. When you go gambling, you are the one paying rent and paying the utilities for all these huge, beautiful buildings. Second, you always gotta have the newest things. Nowadays, the cool thing to do is to finance your phone with 0% APR, because now you're not paying any interest and you can pay off your phone in 24 months. But what ends up happening for the majority of people is 24 months go by, you pay off your phone, and then people feel weird. Ooh, I don't have a monthly payment anymore for my phone. So what do? They go out and they buy themselves the brand new iPhone. Now you're not paying $40 a month for 24 months. You're paying $40 a month every single month for the rest of your life. And the monthly payment is actually probably gonna go up because the price of phones are probably gonna go up too. When you buy things with 0% APR, you might think you're doing the financially smart thing because now you're not paying any interest to borrow money and you can keep more cash in your account. That way you can invest it and grow it. But what ends up happening for the majority of people is you don't invest this extra cash, you spend this extra cash because you never felt the pain of money leaving your account. So now you're spending your money on a bunch of nice things that you don't need, and when the monthly payments end, you go and buy a new nice thing because you feel weird not having a monthly payment. The reason 0% APR is so profitable for businesses is because they know that you're not going to actually invest this money like you say you're gonna do. They know that you're gonna go spend this money on a new sofa or on a new TV or on a new computer. In America, we got the whole concept of affordability wrong. Most people think that they can afford a new phone, but all they can really afford is the monthly payments. Being able to make the monthly payments is not being able to afford the phone. Being able to afford something means being able to buy it in cash without worrying about the price, which brings me to number 3. Buy now, pay later, or as I like to call it, broke now and broke later. I don't know where I heard this saying, but I really liked it and it stuck with me. Broke people love payments, rich people love profits. If you want to be able to afford something, you gotta follow my rule of 5. If you can't buy 5 of them, you can't afford 1 of them. If you wanna learn more about affording something, I already made a video where I talked about the secrets of not being broke, and I will link it for you in the description below. The reason I wanna talk about this buy now and pay later concept is because, well, there's a new movement in this financial technology space trying to help people with this buy now, pay later system. I'm an entrepreneur, so I love when new businesses come up and they find new disruptive ways to kind of shake an industry, or they come up with new innovative ways to do something better. But now some companies are finding a better way to do the layaway system. Layaway is this concept where if you don't have the money to buy something, you can tell the store, oh, I don't have the money to buy this phone, let's say for example. So you just put this phone on the side, and now you're gonna make monthly payments or whatever payments to the store until you can buy the phone, and once you pay the store enough money, now you can buy the phone. Nowadays, this layaway concept is going digital with interest. Apps like Affirm and Afterpay are shaking up this whole layaway system because their whole model and premise is built around the idea of letting you buy something that you cannot afford, and then you can pay for this thing later with interest. It's concerning because retailers think that this is the future. Some retailers have said that they believe that this is going to be almost like free shipping, where when you buy something online, you'll always have the option to pay it in installments later. This whole idea of buying things that you don't need, that you can't afford, that don't pay you with money that's not yours is one of the biggest reasons why so many Americans are broke. And now, through the help of technology, it is only going to become easier and more accessible for you to buy things that you cannot afford. People are already going out and buying new sofas on 5-year or 6-year installment plans, but they only keep their sofa for 3 or 4 years. So now, 3 or 4 years go by, you get rid of the sofa, you still got the monthly payments for your old sofa, but now you go out and buy a new sofa, and so now you have 2 sofa payments. One for a sofa that you don't own, and second for a sofa that you just bought. If it doesn't make you any money, it is never okay to finance it. Fourth, let's talk about eating out when you're in credit card debt. Let's do a little bit of math. Let's say you invest $750 a month. So every single month you take $750 and you invest it, and let's assume that you can get a 19% annual return on your money. So you're investing this money every single month, and every year you're getting a 19% return. In 5 years, you are going to have over $100,000. In 10 years, you are going to have over $315,000. And in 16 years, you are going to be a millionaire because you are investing $750 a month and you can get a 19% annual return on your money. Now, at this point, you might be thinking, but Jaspreet, how am I going to get a 19% consistent return on my money every single year? Well, your credit card company is doing that every single year when you have credit card debt. This is why credit card debt is keeping so many people from becoming wealthy, because you are spending all your money making your credit card company rich while it is keeping you broke. That's why if you have credit card debt, you gotta know exactly how you're spending money. Because let's say you're eating out for lunch. You might buy yourself a nice wrap and a salad and a coffee, add that up plus some tip, and it's going to cost you $25. Now, if you do this 30 times a month, that's going to cost you $750 that you're spending every single month on food that you can make at home for a fraction of the price. Now, we already went over the math, but if you are in credit card debt and you're spending $750 a month on things that you don't have to spend, then, well, you are making somebody else wealthy instead of yourself. Now, you might be thinking something like, oh, well, at least I don't spend all my money on food. Well, if you're in credit card debt, just do the math. If you are wasting $25 a day on something that you don't need to, even if you don't eat out that much, just do the math. If you are wasting $25 a day, that's $750 a month, and we already did the math of what that kind of money would make you if you invested the money at your credit card's rate. Okay, so if you are wasting $25 a day, maybe it's food, maybe it's your Netflix subscription, maybe it's other things that you're blowing money on that you don't need to. This is money that you could be using to pay down your credit card debt. That way, you can use your money to build your own wealth instead of your credit card company's wealth. If you are interested in learning how you can invest your money, we have tons of articles on how you can do that on our website, theminoritymindset.com, and I'll also link an article for you up here and in the description below. 5, buying gifts you can't afford. People are always gonna need gifts. People keep graduating from school, people keep getting married, they keep having babies, they keep having birthdays, they keep having anniversaries. If you have a big friend circle, that can add up to a lot of money on gifts very fast. If you are in a financially tight situation, stop blowing your money on gifts, okay? Write them a card, tell them you love them, and tell them that you're gonna get them something once you get your finances in order. Or if you can't get yourself to do that, then talk to your friends about creating a limit on how much you can spend on gifts. That way you're not spending more than $20 to buy a gift for your friends. Or you can create a gift that's not gonna cost you any money. Like, you could give me the gift of smashing that thumbs up button below. 6th, don't blow your money. Literally, cigarettes, drugs, alcohol, weed, all these things hurt your body, they hurt your mind, and they hurt your wallet. What are you saying, Jaspreet? Am I not supposed to have any fun? Look, I know it's easy for me to say this because I don't drink, I don't smoke, I don't do any drugs. But just look at this practically, okay? If you are in a financial crunch, all these things are costing you money and they're not giving you any financial return. It's a triple punch to you, so you gotta figure out how important it really is. Kind of like number 7, driving a car that you can't afford. The average payment for a new car in America right now is more than $500 a month. Now, this is also what I call a triple threat because your car is a depreciating liability. It doesn't make you money. You have to pay interest to drive this depreciating liability, and you have to pay to maintain your car. So you're paying to maintain a car that doesn't make you any money, and you're paying interest to do that. Now look, I get it. You want to drive a nice car and you want to look rich, but you got to ask yourself, would you rather look rich or be rich? If your answer is look rich, then yeah, by all means, keep paying for your fancy car because you look rich when you do that. If your goal is to be rich, well, then you gotta be rich before you can look rich. If you want to be rich, you gotta put some money towards your investments before you're paying money to drive something that's not making you any money. I already made a whole detailed analysis video on YouTube where I talked about why your car is keeping you broke, and I will link it for you in the description below. 8. Do not invest in something that you do not understand. Bitcoin in 2017. Real estate before 2008, and dot-com companies before the year 2000. Do you want to know what all three of these things had in common? People were investing their life savings into these things, thinking that they were going to get rich overnight because they thought that these assets could never come down, and in all three of these situations, people lost everything. Investing is important, and it is one of the fundamental keys to becoming successful. I talk about it all the time on our YouTube channel. But you need to be investing in things that you understand, not just in things that people are really excited about. Before you make your next investment, ask yourself, why are you investing? Is this thing going to have potential in the future? And how am I going to make money? 9. Don't shop because you're upset. There is a concept called retail therapy where when you don't feel good, you can just go over to the mall, blow a bunch of money, and now you're going to feel a whole lot better because you bought a lot of nice things. Mental health is a real issue and it's a real problem, okay? I'm not trying to discredit that, but let's look at this practically. If you are upset at somebody, or if you're upset at something, and you go and take out your anger and frustration by blowing a whole bunch of money at the mall, you are not fixing the root cause of the problem, and you're creating a new problem: debt. Find a new therapy when you're angry, when you're upset, when you're sad. Don't take it out in the mall by swiping your credit card. Take it out by going on a walk, maybe listen to an audiobook. And number 10, you never pay yourself. The way money works for most people is they make money, and then they spend money, and then they wonder where all their money went. If you really want to build your financial freedom and your wealth, you have to pay yourself first. Now, when I say pay yourself first, I don't mean take out some of your cash from your bank account and go to the mall. I mean, take out some cash, put it into your savings account. That way you can build a savings cushion, and take out some other cash and put it into an investment account. That way your money is growing and building your wealth, and now you only live off of what's left. Now what you're doing is you're building a savings cushion. That way you don't have to worry about a financial emergency happening and going into debt when your car breaks down. And with your investments, you are creating more income because your money's working to build you wealth. This is not something that happens overnight, but now you are laying the stepping stones to build this wealth. That way you can live more financially free in the future. If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. Assets are things that put more money in your pocket. These are the things you need to buy if you want to build wealth. Liabilities are things that make you look rich, but they keep you broke.